The man behind the New Orleans Investment Conference joins us now on Kitco News, Brien Lundin, publisher of the Gold newsletter. Brien, thanks for being with us.
Thank you for coming.
Yes.
We love having Kitco here. We have a lot of great content, a lot of speakers, and we're so glad that you're able to bring some of this to people.
And it's been too long, and I just want to, I was going back on the reels last night,
Right.
and I found our old interview. So last time we spoke, it was right before the last election. It was Obama versus Romney.
Yeah.
And gold was at $1,700.
Yeah.
How things have changed, right?
They really have, and one of the things I talked about last night in my presentations was that we see a lot of these patterns repeating, and the one pattern that isn't repeating, hasn't been repeating, is the presidential election. Nobody's ever seen anything like this, and everybody's wondering what are the ramifications for the markets and gold in particular.
And you were saying on the sidelines that while many people feel Trump would be good for gold, you think otherwise?
Yeah, all of my friends from around the world outside the U.S. have come up to me over this year and said, what do you think's happening with Trump? Isn't that going to be great for gold? And I look at them in amazement and I say, no, not really, because there's, geopolitical issues, worries, tensions, and the like, they tend to drive gold over the short term, but it's never a long-term driver for gold. It's the underlying fundamental economic trends that drive gold. And that's why I've told people that Hillary Clinton would be more bullish for gold because she would represent a continuation of the policies that we see are going to culminate in really a bullish environment for gold over the longer term.
Now, most of the sentiment here, I've been speaking with the other speakers, and they feel that 2017 will be a turnaround year for gold. Now, the metal up about 30% this year. Do you agree? Do you think that it will be more positives for the metal? I
think there'll be more positives. I think 2016 really represented the turnaround for gold, and we're going to continue this trend. I spoke a second ago about the repeating of patterns. It feels like 2002 right now, in that the metals have gone up, gold's gone up, the major mining companies have doubled, some of these juniors have quadrupled in value. And everybody, or a number of people, really think that maybe they missed the big move and it's over. Well, that's really the situation we were in 2002. And we had 9 years of off and on, but generally a very strong bull market in resources after 2002. And I think that after we've gone through this really major long-term bottoming process, we have that kind of a market ahead of us now.
And what are you advising, the gold stocks or physical bullion? Or both?
Well, really both. I think if you look at why you want to own gold and you want to have physical gold, you want to have that core holding, and we've always recommended that. But if you see that gold is going to rise, if you're confident in that's going to happen, you want to have the mining stocks to leverage that move. You want to have the juniors to even provide even more leverage, but you have to do your research in those areas and really know what you're looking at.
So how much of a percentage of a portfolio do you feel should be allocated in gold and the stocks?
Well, if you look at scholarly academic studies, if you look at modern portfolio theory, then 5 to 10% of an overall investment portfolio should be dedicated to precious metals. And I would say that about a fifth of that should be in physical metals. And then you play along the spectrum. There's so many different ways to own gold, whether it's options and other futures, so-called paper gold, paper representations of physical metals now with the ETFs, the mining stocks across the whole spectrum from the majors to the juniors, and different metals. Silver offers the optionality on gold. If you think gold's going up, you should also have a very serious percentage in silver.
That was going to be my next question. Are you liking silver?
I absolutely do. Silver will always leverage the moves in gold both to the upside and the downside. And that, of course, is the risk, but it's also the greater return.
Brien, you have a lot of great speakers lined up at your show. Krafthammer, Dennis Gartman, Peter Hugg.
Peter Hugg, yes. Great to have Peter back.
What can people expect from the conference?
We have a lot of great people here. I'm telling people that for the first time this year we have Peter Bukvar, who's a real contrarian on CNBC.
And we'll be speaking with him.
Yes, he's really a brilliant analyst. I've changed my view on the markets to a large degree after reading what he's been writing this year. We have James Grant, who is the most eloquent and insightful guy, I think, in the gold markets.
And interest rates.
And interest rates, exactly.
Yeah.
And of course, that's the name of his publication. But the advantage that people get coming here is not just the speakers that we have, because this is the age of the internet and CNBC and all the business channels. So you can get a lot of these people on television, but you can't go up and talk to them. You can't ask them your questions. You can't mingle with other investors. And it's the energy that you get in an environment like this over a few days, talking with people and really absorbing some really, really smart views and talking to really, really smart, successful people. You can't get anywhere else.
Well, Brien, continued success. Best of luck. And thank
you
you for stopping by. And
Glad to be here.
And thank you for watching our coverage from the New Orleans Investment Conference. We'll have much more for you, so be sure to stay tuned to Kitco.com. Thanks for watching.